Well, among global markets as well as global trends, the big number that we were looking for was the US CPI inflation number for the month of January, and that's come out at 7.5%. It's around 30 basis points more than what most analysts had anticipated, and on a month-on-month basis, it's come in at 0.6%. That's quite loud for anyone's liking, and of course, bond yields in the bargain have just spiked. They've gone above the 2% mark, and of course, stocks have fallen lower, with the tech basket being impacted the most. So let's have a quick look at what's been happening. Well, it's come in, the US inflation numbers have come in at a 40-year high. So it's a multi-decadal high, with core CPI inflation also higher than expected at 6%. Of course, this will be a cue for investors to judge as to how the Fed will respond. And in fact, we've had Fed governors of several states come out and speak about this and expect that the rate increase of almost 1% is what James Bullard is looking at by 1st of July of this year. It's a large increase for the standards of the US Federal Reserve. In fact, the other number that's come in is the weekly jobless claims, which have come in lower than anticipated, but really no one's looking at that number at the moment. The entire spotlight is on the US CPI inflation number. The Dow has fallen almost 1.5% in trade yesterday after 2 good days of trade. The S&P 500 was down 1.8+%, and the Nasdaq is 2.1% lower. Of course, the tech basket being the worst hit. And despite this fall, major averages continue to be in positive territory for this week, and that's good news for investors broadly. When we move quickly on to Europe, well, European stocks closed mixed on the back of course, the US inflation data that came through. The DAX was up just 5 basis points. The FTSE was up around 0.4%. The CAC 40 and the Stock 600 were lower. The CAC 40 was down 0.4%, and the Stock 600 was down 0.1% in trade yesterday. Moving quickly on to how Asia has opened up. Well, Asia has opened up largely lower. We've seen the Hang Seng, the ASX 200, as well as the Kospi, all three trading lower at the moment. In fact, the Hang Seng is down 0.4%, but the ASX 200 and the Kospi were lower by over 1% in early trade. That loss has been more tempered as the last hour or so has progressed. But there is the Nikkei as well as the Shanghai who are holding on to gains, and who are holding on to gains quite smartly. So the Nikkei is up around 0.4%, while the Shanghai is up just above the 0.1% mark. When we look at the SGX Nifty, that is though lower, down 1%, and early cues, at least for Indian markets, indicate that it will be a negative start. That's how we're looking at it at the moment. So moving quickly back to how the commodities are looking early in trade today. Oil is inching ever closer to that $90 a barrel mark as tighter supplies continue to mar global oil markets. Gold, though, which had gained nicely over the last couple of days in the run-up to those inflation numbers, has come down a few points. It's down to around $1,825 an ounce. Moving quickly on to the dollar index, it's closing in very quickly on that 96 mark and is up almost 1/3% in early trade today. The 10-year US Treasury, as we did mention, was breached at 2% mark, which meant that of course there was more dollar buying that happened, and it's holding out above that 2% mark quite well in early trade, at least today. Bitcoin fell slightly on choppy trade yesterday, and of course we saw the inflation numbers come out as well, and that impacted Bitcoin to a certain extent as well, given that the bond yields went up, and Bitcoin is now just below the $43,500 mark. That's a roundup of how global indices are looking in early trade today.